Hi everyone. I hope you're having a great week so far. Today, Melanie and I are back to discuss the topic of fees associated with your interest rate. How much is your mortgage really costing you?
It's time for Realty Tuesday with Cheryl and Melanie, keeping you informed on all things real estate.
When you're looking to secure a home loan and you're shopping for your interest rate, it's important to know what to look for with fees that can be associated. We're delving into the world of APR and lender fees, two crucial factors that could make a substantial difference in the total cost of your home loan. Melanie, let's dive right into it.
Hi Cheryl. APR stands for annual percentage rate. You will find it on page 3 of your loan estimate. The APR is not the rate that will apply toward the borrowed funds, and it's not the rate that your payment will be calculated on. That rate is known as the note rate or the interest rate. The APR takes into consideration certain prepaid costs and closing costs, such as the VA funding fee, the FHA upfront mortgage insurance premium, the USDA guarantee fee, and even mortgage insurance, expressed as a constant rate, as if it were being paid over the life of the loan. The APR is a calculation that was created by the federal government to help compare loan costs. Generally speaking, the bigger difference there is between the note rate and the APR, the more costs there are associated with a loan.
Thanks, Melanie. It is certainly important to pay attention to these numbers, and I know lender fees can vary, so be sure to read the fine print and don't just look at the interest rate that is being offered. One company might offer you what seems like a lower interest rate, but there could be additional fees that have been tacked on. The truth about interest rates is there's usually not just one rate that is available. Melanie, can you please share more about this?
You can get a higher interest rate for less fees or a lower interest rate for more fees. Just keep in mind that the fees associated with the interest rate directly affect your closing costs. So be sure to ask whether there are any origination fees, and if so, how much they are, as well as whether there are any discount fees associated with the rate you're being quoted. Also, as we've discussed, keep in mind that rates and the fees associated with them can change on a daily basis. So it's a good idea to see everything in writing and go over all of the numbers to make sure that you thoroughly understand them before you lock in your interest rate.
Another thing that people might not be aware of is that lenders can offer credits to help offset closing costs by offering a higher interest rate, which with the higher rates we were experiencing, I imagine not many people were looking into that. With rates softening though, let's hear what Melanie has to say.
Now that rates have gotten a bit lower and will hopefully continue to move in the right direction, it's good to keep in mind that this can be an option for you as well. It's basically the reverse of paying discount points to buy down the rate. The lender can offer you a higher interest rate that gives them a rebate that they pass along to you to help offset your closing costs and your out-of-pocket expenses. Be sure to keep this in mind when you're considering all of your rate options.
Melanie, you are a wealth of knowledge. Thank you. There are other third-party fees you can expect, such as appraisal and the recording fees, but those are all third-party fees not controlled by the lender and will generally be similar across the board, give or take a little.
That's right, Cheryl. Thanks everybody for joining us. Be sure to stay tuned for next Tuesday when we will be wrapping up our interest rate series by discussing refinancing. Have a great week.